Amid mounting fears of a global economic recession, South Korea's KOSPI dipped to the lowest in 20 months. The local currency slid down against a greenback in levels not seen in over a decade. Inflationary pressure is rising, the possibility of a big step by the central bank as well. Kyung-eun starts us off.
South Korean stocks dipped to their lowest in 20 months on Wednesday over fears of a global economic recession. The KOSPI index fell by 2.13%, coming below the 2,300 mark for the first time since last October. Foreigners and institutions led the fall, unloading more than $720 million. Fueling the foreign selling was the dipping value of the Korean won. The local currency sank to its weakest level against the US dollar in 13 years, as low as 1,311 per dollar at one point. This comes amid downbeat data from Europe, with the euro hitting its weakest point against the US dollar in nearly 2 decades. There was also tumbling oil prices led by fears of a global recession. As a result, the country's top refiner, SK Innovation, slumped more than 5%. Amid the weakening won and rising inflation, and economists at S&P Global Ratings projected a big step by South Korea's central bank, raising its key interest rate by 0.5 percentage points in the upcoming policy meeting next week, and a combined 0.75 percentage point to as high as 2.5%. The economists attributed consumer prices jumping 6% on-year in June as a factor, the fastest rise in nearly 24 years. However, the global ratings agency said that Korea's economic growth rate will not be a concern, projecting Asia's fourth largest economy to expand by 2.6% this year. Kyung-eun, Arirang News.